What up, stock dads? Welcome to another episode of Penny Slayer Talk Shit and Fuzz brings them down from the ledge. All right, guys, so we've got a killer clown fed situation happening in this market right now, and we are going to try our best to try and talk this into a little bit of layman's terms so we don't get into a quantitative tightening, quantitative easing, gag me with a spoon conversation. Fuzz, how we doing tonight, man?
Hey, I'm doing pretty good. It's been a good weekend. Nothing too crazy or out of the ordinary. So it's just been really nice. How about
Yeah.
yourself, man?
Well, I gotta tell you, man, we are preparing for this contract at work, and I'm telling you, man, it's getting hectic, right? See, the clock is ticking,
Getting
and
down to
then
the
right
wire.
when we think that we're close, the guy who's supposed to give us the answer tells us that we're a few months out. So now we're just sitting here twiddling our fingers around, going, "Well, we thought it was going to be called this month, and now it's 2 months from now." So it's probably more than likely going to be after the midterms, so there's not a big, huge argument. But we're waiting, I guess, until after midterms to figure out who won this $100 billion contract that we're going after. But with that being said, we've got big news that came in through the CPI data. I mean, were you able to trade that momentum at all? I mean, Thursday was obviously a big green day, followed by Friday.
Yeah, followed by Friday. Friday was fun.
Yes.
Yeah, we definitely did fantastic on Friday. Yeah, Thursday, good Lord, what a beast of a candle that was. Yeah, we played that a little bit. The day before CPI, of course, was really miserable is a good way to put it. And then we had the craziness, big gap down, and then pretty much I guess everybody just kind of covered their short positions a little bit, and next day shoot them on back down, kill the bears, kill the bulls.
That's right. It was an incredible move, right? So let's talk about this a little bit. So inflation numbers came in above expectations. So the estimates were for 0.3% for the month over month and 8.1% for year over year. And then we came in at 0.4% and 8.2% respectively, right? So not by much, man. We missed the expectations by a hair, if you will, right?
Yeah,
I mean, if we're splitting hairs at this point, we lost.
Right.
But
it kind of makes you wonder, like, who comes up with these expectations, because you really want to go over there and like slap them up outside the head. Like, come on, man. Like,
yeah, no, I hear you.
Get it together.
So, but on the other hand, right? I mean, this gives the feds the power to go and maintain their hawkishness, right? I mean, the lagging employment data is still strong, but rumors are swirling that the layoffs are coming. And so that kind of leads me into these banks, right? So banks really kicked off earnings this week because now we're getting into a big earnings week next week, and they talked about how consumer banking was real strong due to higher rates and loan balances, right? Meanwhile, mortgages, investment banking, and trading businesses, they really struggled in this current environment, right? But my question here is, with such good banking reliability on higher rates and loan balances, how is that sector going to fare when we decide that our unemployment is too low, and we try to get companies to lay people off, right? What happens to those loans? I mean, are we talking subprime loans here? I mean, what I mean? Like,
it's
what's happening?
It's garbage. Everybody's gonna get hit,
I mean, essentially what's going to happen is these families that get laid off, right? They're going to figure out that the best route of action to get out from underneath the crippling debt and being able to afford the home they just purchased at an enormous rate is to file for bankruptcy. You get to keep all your assets, your major assets. You get to keep under $20,000 in cash and get rid of all of your exponential debt that you have. Right? I mean, it's really going to be a big problem for banks, and I'm surprised that people aren't looking more into this. I mean, you think what does 1% mean in unemployment? Do you know? Do you know what that number is? How many people that is? I mean, it's got to be somewhere around 250,000 people. Can you
Yeah,
imagine
if not more, if you kind of
Imagine
put the
500,000
math to
people
it.
going and just filing for bankruptcy because they lost their jobs, right? They can't
Right.
afford the debt. So they're
Can't
going to
afford
go
the
file for
house.
bankruptcy. And then what's going to happen to the banks? Down she goes, man. So I'm there. I'm bare on banks, right? I mean, I'm sort of trying to
Yeah,
read
I'm
the writing on the wall, if you will, right?
yeah, absolutely. Uh,
Um, yeah, go ahead.
they it's just the system's a mess, and the bad thing, I guess you can really say, is that the banks are the ones that are going to be writing the new rules when the crap hits the fan.
Yeah, no, I
They're
agree.
going to spin it to however they can to get it to work and for them to come out squeaky clean. Maybe not so much the regional banks, but that might be something to keep a closer eye on. But the big boys, they're going to be fine. They'll be coming out squeaky clean, and you're going to see just fine. But as far as like the down move, yeah, they're going to go through some pain just like everybody else. But
Yeah.
in the meantime, it's going to be kind of scary, maybe a little wackadoo on the
Mhm.
ride down. But yeah, I just don't. Yeah, something doesn't really line up there. But like I
Yeah,
said,
I
I
mean,
think they're
look,
gonna be
the
fine.
feds
They're gonna
the
write
feds
the
only have
rules.
so much. They only have so much in their arsenal, right? They've only got so much. And so, this week we've got some key data coming out, but for the most part, a light monetary catalyst coming through for this week. But one of the things that I'm watching is, we've got key housing data coming in, which is
Yeah,
also showing signs of slowing down. The average 30-year mortgage rate is now around 7%, uh,
7.
which is causing demand to just dry up. Right, the supply end of the equation is supportive of prices in the short term, but there's a lot of inventory that's set to come on the market really soon. So they're starting to build homes a lot more, and I think that data is also coming this week, which we should actually be able to solve the issue of supply. So what
Right.
happens to prices though? What happens to prices to homes when the rates are really high and then supply can also meet that demand, right? Prices come down, baby,
Yeah,
right?
yeah. I
So
mean,
we're waiting. I mean, I just don't know if that's going to happen in Texas. I really don't. So
I
this
don't
is where
know.
I live, right? I live in Texas.
Right,
I'm just not 100% sure that there are a few states like Florida, Texas, all these states with no state tax, right? I think
right.
that others are flocking to and driving up the prices of the homes. I just don't know if those prices are going to come down. It'll be interesting to see what happens in the next year or so.
Right. Yeah, they're even like building like this whole brand new neighborhood subdivision like down the road from us, and I'm like, timing can't be worse. Like who's buying
I
this
know it, man.
crap?
Yeah, I mean, it's impressive, right? Because as you see the cost of building homes becomes just a hair slight cheaper. Now that demand comes in and tries to swoop all that stuff up, right? We'll see. I just don't know anybody that's willing to buy at 7% right now.
Yeah, I personally don't know anybody that's looking right now.
You know,
Maybe one or two people that, maybe have to move, especially military folk, but I could probably count on my hand how many people I know that are like actively trying to get something right now.
yeah. I mean, at this point, I'm really trying to figure out where my money's going to be safest, right? I mean, obviously, we're going to have turmoil in 2023,
Yeah,
leading into like the presidential campaign, right?
right.
So we're going to really have a crazy 23 and into 2024. I'm trying to figure out where my money's going to be safest, right? And so as I come to understand the way the energy sector and oh man, what was the other one? It was energy, and what was the other? Healthcare. So
Healthcare,
as
yeah.
energy and healthcare, they start to play very nice with each other, right? And as the markets are going down, you can see the XLE and the XLV keep up with the markets, right? I mean, they're going to the upside. So the major thing that I think we should all be paying attention to is the rebound, right? When do we know that the rebound's coming in? And what sector is going to pay off the most? It's going to be energy. It's got to be healthcare. And just so happens, both of those fall into the Nasdaq. So I'm waiting for the Nasdaq to eventually recover. Well, okay, so some of it falls in the some of it falls in
Right,
the Dow, right? But some of it
right,
also
right.
falls in the Nasdaq. So I'm watching the energy sector fairly close. EQT, all those XOM,
Yeah,
Chevron, things of this nature,
Chevron.
right?
Yeah.
I mean, these are the major companies that I may try to put my money into that is safest. And then when it does rebound, my money's in the right spot because even though we're in a down trend in the markets, energy and healthcare are going to the upside. So I'm waiting, right? I mean, I'm just inching my way into this energy sector. How about you, man? Is there anything that you're getting involved with?
You know, I think you bring up a pretty interesting point with healthcare and energy. And I think like right now, yeah, absolutely pay attention to those guys and even, maybe even the natural gas guys, especially US owned
Right.
natural gas, because they're starting
Man,
to say,
US, baby.
since Europe's having issues with Russia, maybe we can step in a little bit and maybe help alleviate some of that and, bring in possibly, big customer, hey, hey. I
Be
think
the
the
heroes we were bred to be, my man. Be the hero.
right. So, hey, we'll see. Maybe it might take a few years, but hey, I mean, at least you're not relying on Russia there. But,
Yeah, damn right.
um, I think, as far as it goes, yeah, short term, probably energy and healthcare, but everything is pretty much aligned to go down. So I think that's the scary part for me is that when everything is flashing red, well, you might want to look out. so if I'm not ready to, sure, I mean we can nitpick and all that kind of stuff, but I just want to have some like maybe a toe in the water and like the rest of my body out of it kind of thing. So
You are
I'm like
still
kind of
80% cash, aren't you?
heavy cash.
My man.
Look, day trading is really the way to
Gotta be
go
the
right
key.
now.
Yeah, I hear
And you
you,
got to
man.
be quick with it because volatility is way up there. And you saw it Thursday and Friday. I mean, just crazy, wacky, unbelievable moves. And the only way you're going to do it is if you get in fast, or
Yeah,
time your entry is pretty good. With what your rules are. Uh, but also take profits fast
yeah,
because things will turn on you in a dime with this VIX up here towards 35, maybe even to 40 when it's all said and done, maybe even higher. Who knows? So, you got to play quick day trades, and I'm not ready to swing anything longer than a day or two. Definitely not to the long side. If I'm swinging something, it's going to be a put.
yeah. My man. That's what I'm doing. I've got puts in the next week, baby. I went heavy.
Yeah,
I went heavy on the
heavy
puts on
puts.
banks,
Yeah.
man. I should have bought Bank of America, but
Mm.
I'll
Oh,
just
that would have been
play
a
it
good one.
Monday. I'll just wake
Yeah,
up
just play it.
Monday, look at Bank of America, and go, okay, I'm buying
Ah,
puts here, and just let it
yeah.
go.
Now,
So,
do you buy time with those, or are you buying
what,
weeklies?
what's that? Well,
Do
I
you buy
bought next.
weeklies?
So I bought last week. I bought this week's towards the
Okay,
end of the day, right? Because
I gotcha.
I wanted all that weekend theta
Theta
to
to go
kill
away.
the contracts and then get in cheap.
I gotcha. Yeah,
But
I'm usually I like to look at the November contracts right now just for time's
mm,
sake, but
yeah, yeah, yeah. No, I hear that.
you can definitely like right now you could probably get away with like some weeklies or next weeks or whatever. It's just because the Ivy is probably still not as bad and Theta is probably not terrible. You just, play it out, get a feel for
Yeah,
it.
no, I hear you. I mean, trading live. Then we had a lot of people trading live this weekend or this week, right? I mean, this past
Friday was
Friday was
nuts.
there was a lot of people. But man, what's great is like people were asking questions and they were getting involved, and it was great to see that everybody was just being able to take advantage of it, right? And even though most of the market was going to the downside, we were killing it in the Discord. We were making great moves, and it's awesome because like you and I and especially like Assassin, my
Yeah.
guy, right?
Yeah,
Came
Assassin's
into the
good.
Discord,
Good
man, and
stuff.
just started coming through. I mean, he is such a quant. Like his
Yeah.
mind is so quantive. And I love that guy, man. So he's able to answer a lot of questions and he's extremely smart. So bouncing off ideas off of each other's was really fun Friday, man. It was cool.
Yeah, and it helps a ton when there's people in asking questions, and we're bouncing off ideas with
Mhm.
each other. We're like, hey, well, check this out, or hey, take a look at this, and you're like, oh, I'm definitely getting into that.
Yeah, right,
it makes
right.
it makes life a whole lot easier. Yeah, we had a
So,
fantastic crowd Friday. It was crazy.
Buzz, I got to tell you, man, I'm going to do something here that I promised myself I would never do on live air anywhere, whether it was face to face on YouTube or in an interview somewhere on a radio show. I would never talk about quantitative tightening or quantitative easing. But I got to tell you, man, this next couple of sentences is going to have quantitative easing in it. And I just need to get it off my chest. I'm sorry.
Lay it on me. At least you're
All
not.
right.
I thought you were
Okay.
gonna say
So,
like you're gonna show your feet or something.
oh
So
no, man, what? I mean, I could do that too. I don't have any socks on.
oh,
So, so listen, inflation levels are at multi-decade high, right? And the eventual Fed pivot is may not look exactly what it has in recent years, right? So previously, quantitative easing
that
was a program to maintain low long-term interest rates,
yep.
right? But if the correction leads to a financial crisis, which it could, the Fed's unlikely to sit by idle, right? And so going forward, quantitative easing could look like a rate capping program. In other words, in layman's terms, the Fed would act as a buyer of last resort to prevent yields from rising too much, right?
I gotcha.
So something similar was done coming out of the Great Depression in the World War II. Long-term rates were capped at a federal government as the federal government grappled with fiscal issues, right? And so we can't ignore the writing on the wall when it comes to the federal government's finances. They simply can't afford higher rates for much longer. So if the yields start to rise beyond a certain point, look for the Fed to step in and try to do something. Um,
Okay.
Higher rates are the nemesis of zombie companies. You know what zombie companies are, right? These are the companies that are the bloodsuckers of the stock market. These are
Okay, I
the
gotcha.
Mullins, right? These are the Mullins of the world, right? Where they're like, we
Fair enough.
know our stock's only 50 cents, but we're gonna dilute you more. Like,
Sure.
I was just incredible with that stock. But they've benefited too much on these low interest rates for years now, and the period is a massive
Trash.
repricing with the respect of risk taking place in the market. So um, it has a lot to do with earnings and cash flow, right? You got the two things that are the most important. Growth potential on its own won't cut it anymore in the inflationary environment. Capital needs to be a tangible results instead of good company stories in this macroeconomic environment, right? So
Sure.
stop trying to say, "Oh, this is a cool company with a cool story." Sort of like my how I did with Intel, right? That whole thought process needs to change for me, right? Of course, I love jobs for America and I love bringing chips into America, but I've got
Right.
to think on a more macroeconomic level here on what the company's doing with their money, right? How are they spending their funds? Are they capitalizing on the money that they have to pay off their debt to reduce my risk of my cash being in their company, right? So it's just those types of things that I've got to come to a realization with as a trader that I really need to start recognizing, right? Without
Right.
cash flow,
I hear
you've
you.
got a shit company.
You got a
Without
bad. You got a
revenue,
problem.
yeah, I mean, without profit, you've got a shit company. Don't put your
Right.
money in shit companies. It's gonna kill you.
Right. Yeah. That brings up a good
That's
point
it.
because
That's my spiel.
now's a good time to really maybe look at some of those fundamentals and see who out there is actually, going to make it out pretty okay. Of course you got, Apple, Microsoft, Google, you got the big boys. We all know they're going to be all right, but take a look at some of those companies that you possibly have or are looking at. Take a deep dive, just real quick. It doesn't take much to look at some fundamentals and be like, okay, your PE's okay, but for some reason you're just not making money the way you should be. or you're underperforming your current sector. So do you really want to be involved in that during these headwinds? I don't
Very
think so.
true. Yeah, I mean, listen, like there's a lot of content out there right now revolving around value investing. You look,
Yeah,
we knew back like last November that value investing was going to be a big craze that happened for a few months, right? The
right.
problem, right? The problem with this is value investors are very how can I say this? They're very susceptible. No, they succumb, right, to trying to time the market's bottom. And it's a bad way to trade, right? You've got to get involved with learning the technicals. You've got to look at a technical bounce compared to a monetary bounce, right? You've got to really understand how the market moves in earnings comparatively to technical bounces. Maybe you can catch both of them at the same time.
Maybe,
That's
yeah.
the greatest part. But timing a bottom as a value investor is the downfall, right?
Yeah,
It's the
don't try to
hardest thing
time
to
it.
do. The only thing that you can do as a value investor is go, hey, well, at least I bought this dip, and if it keeps dipping, I'm excited about buying the next dip, right? And you put two thumbs up, you're like, everything's okay, and the whole room around you is bursting in flames.
Bursting into flames, and you're like, "Ooh, what's going on?"
This is fine. I'm fine here. I mean, it's kind of like how my 401k is sitting right now, right? It's like,
Yeah, don't
hey
look at
man,
that every
everything's
day.
great here. You're gonna be all right. It's
Yeah,
20 years
don't look
down
at
the
that every
road. Don't
day.
think right now. Think, ahead of time. It's
Right.
gonna be fun, right?
Yeah, yeah,
But
yeah.
I think that we've got a long way to go, right? I think 2023 is going to be interesting. Like you said, I think that I'm going to be utilizing our knowledge in the Discord
Yeah,
to just keep day trading away and making these monetary gains and adding them to my cash flow. That way, when it's time and I see an actual technical correction, maybe S&P to 3,800, right? Is that kind of the
sure,
level you got? I mean, listen, if I see the S&P back at 3,800,
sure.
okay, maybe it's time to start dipping my toes into the sand a little bit, but I'm cautious, right? I'm not buying
Yeah, yeah,
bottoms,
yeah,
right?
yeah.
I'm buying recovery. So that's
Right.
where my money's at. And listen, when we're talking about 2023 and 2024, right? We're not going to fall into like a Great Depression. We're not going to be like lining up in the soup lines, like waiting for, guys to hand us jackets that we can stuff into one arm and make a pillow. That's not what's happening here, right? What
Right.
we're actually probably going to see more than likely is the debt in the stock market are going to fall, right? And so I do
You
think
know,
that we have a problem with our loans. I think we probably have subprime borrowers. I think we have subprime employees, right, that went out and borrowed a bunch of money, and we're looking for those to kind of come through in bankruptcy. And I think that that's sort of the next step for these creditors and these banks to kind of go through this growing pain of, hey, we took advantage here. We did great for a couple of years. Now it's time to get back to normalcy, right?
right.
And
Yeah,
so I'm waiting for this to kind of function and kind of weave its way through before I really start throwing my money back into the market again.
yeah, and that I also pay attention to the HYG. It's the high yield
Yeah, 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 yeah.
corporate bond. It's the trash credit for trash companies. It's
Yep.
horrible. It's such a red herring, I think, in the market, and uh, it's not a pretty picture. And I can't remember where I was going with that, but yeah, the HYG. Do some research in it if you have
Yep.
time, and it's one of those things you look at and you're like, ugh. And that's just one of those things right now that's really, really hurting the market is that these trash credit bonds or, whatever they truly are, it's just know it's trash
Yeah.
and it's just credit for it's horrible. Just kind of read into it and you'll be like, wow, this actually exists. And you're like, yeah.
Yes, it does. This
It
trash
does. It's
exists.
a thing, and they actually sure get a good rate, but you have this trash credit, who cares?
We
I
actually
don't
have a
know.
question here. Let's get to this question from Brian. So, Brian, yeah, your question here is which company's earnings this week do we think will turn out good? That's a very good question. Do you want to
Mm.
go what companies are going through earnings this week that may have a shot of doing well? I think I have a
All right.
list somewhere here that I can get to if you want to talk about it.
We still have a few banks. I know we got Goldman. We got
Bank
let's
of
see,
America.
Bank of America's on
Fail.
Monday. Fail. Yeah,
Netflix,
Netflix is
fail.
on Tuesday. Yeah, I don't think Netflix is gonna do good. Not yet. They
Goldman
did
Sachs,
release their ad. Goldman, yeah.
Johnson and Johnson, maybe,
Maybe Johnson& and Johnson.
maybe. Um,
Maybe.
you know
I'll have to
what I was
dive into
also
that.
thinking about, and this came
It's
to
bad when
me.
we're like, "Hmm."
This actually came to me last night in a dream, which was totally messed up that I have to dream about the stock market. But you know what I was thinking is these companies that get to take inflation and pawn the prices off on the customer, and they really
Mhm.
don't see any like they don't have a bunch of debt. You know, they're not scared of raising rates or raising prices and putting interest rates on top of, or not interest rates, but the rise in prices for commodities onto
Right.
the customer. Guys like Target, Walmart, all these other companies, they get to buy the product at a cheap price, and then when the price goes up for something, they get to go to their Walmart sign and add a one to it. You know what I'm
Why
saying?
not? Yeah.
Like, you buy it. And so,
I
I was thinking about that.
I
Maybe
noticed,
Hasbro.
Hasbro, yeah, that could be interesting. American Airlines, Delta reported their earnings already,
Mm,
and they had like a very tiny miss, but they actually beat on revenue, which was pretty wild. And we all know that travel's starting to kind of pick up, which is also interesting because inflation.
yeah.
Um, but I guess if you're an American, now's a good time to go to
I mean,
Europe
listen,
because the dollar's so strong. So
all eyes on Tesla really on Wednesday, right? I mean, whether it goes up or down,
yeah,
we're probably going to trade it.
I mean, speaking
We're
of
probably going to
Tesla,
trade it. I don't know.
that
Probably
chart,
more than
uh,
likely zero. I mean, that week option, right? Very, very quick in and out.
yeah, very
Um,
quick, unless you wanna do, like, a lotto shenanigans kind of thing where you're like, yeah, I'm gonna risk, like, 200."
if I had to put, I tell you what, Brian, if I had to put my money on something that I thought was going to do very well, I've got two for you. And I hope you're still here. I hope you're still listening. I got two for you. Ready? Get your pens out, get your paper. Schlumberger on Friday has
Okay,
earnings. That's ticker symbol SLB. It's a
I
very,
like it.
you know what? Our friend Paper Profit, that's probably one of his favorite stocks, actually.
Yep.
I like Schlumberger because they're in the energy sector. And I also like a sneaky one, LMT, which is Lockheed Martin. And I know, they're my nemesis in this
Yeah, I was about to
contract.
say, that's up your alley, ain't
But I
it?
will tell you, man, this government defense company keeps adding to their repertoire of contracts being won by the government. They're just a monster, and they're hard to beat. So I would look for Lockheed Martin to do
I think
fairly
that's fair.
well on, I think that's Thursday. I may be wrong.
Lockheed,
That
da, 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 da.
that may be Tuesday. Uh, I'll have to check.
Yeah, Tuesday
Tuesday.
before the open.
Lockheed Martin Tuesday before open, and then I think Schlumberger on Friday. What about you? You
Schlumberger's
have
on Friday.
anything? You watching anything?
I'm definitely going to be watching Netflix, but I think that's more so to the downside, and of course Tesla, any kind of big name I'm going to watch. But yeah, I think American Airlines, that might be a little interesting just because of Delta's report there, and
Right.
then let's see, I'm not going to play any banks. I do actually hold an XLF put, so
Okay.
there's that. Um, yeah, AAL might be interesting for me, just to see what happens with travel, and
Mm.
then maybe Alcoa. See how
Oh,
some of the metals are going to
metals.
do. Then
Yeah, yeah, yeah.
you got IBM kind of squeezed in there for some reason, so we'll see.
All right,
Yeah,
guys.
I'm not excited about any of the names coming up. Just to be fair, I'm like,
Yeah.
I don't know.
Yeah, I mean, it's going to bring a lot. I think Tesla's going to bring a
Run
lot of
away.
right? I mean, they're a
Yeah.
market mover, right? So
And
regardless
that
if they
chart is
do well or if they
so
do bad,
beat
they
up.
they tend to bring the whole market with them, you know?
Right, and that chart is so beat up, man. It's if it bounces, it might just go crazy. So we'll see.
Someone asked me in the Discord, they were like, "You think by end of the year Tesla will go to 100?" I was like, God. I was like, you're bigger a bear than I am. I was like, no, maybe 156. I mean, it's
Yeah, that's
incredible,
a
man.
big
It's gonna
drop.
be It's gonna be a pretty big drop. If it
Yeah,
happens.
maybe. Yeah, maybe. Yeah, 150-ish,
Mhm.
170. Yeah, okay. Yeah, 100 might be a little extreme.
That's extremely bare. It's like by end of year, I was like, wow, dude. I was like,
Like,
relax, man. It's not that bad. It's like bring them off the ledge a little bit, man. You're
careful.
gonna be all right.
Like,
All right,
yeah.
Fuzz, Talk Dad. Thank you for tuning in for another episode of Penny Slayer talks his shit, and Fuzz does what he does and talks me off the ledge. Thank you guys for
Don't
coming out and
jump.
watching us. We'll see all of you in the Discord. Be sure to hit that like button and hit the damn subscribe for Christ's sakes. That's all we do here, man. We put
do
out
it.
continuous content so that you can listen to us ramble about what's happening in the markets. Good luck next week. If you guys are trading with us live, I'll see you guys live in the Discord. Have fun. We'll see you all soon. See ya.
Bye, guys.